Hey, hi everyone, and welcome to today's our normal monthly Simple Fund 360, Simple Invest 360 monthly webinar. So there's obviously the one from March 2023. Like most of our webinars, today's session is recorded. So if you do need to drop out at any stage or would like to share it with your colleagues, we will have it on our YouTube channel and generally email it out to attendees as well. If you do have any questions whatsoever, please enter them there in the Q&A panel, and we'll come back towards the end of the session and cover off any questions you do have. We do have several BGL team members also joining us as well, so they're happy to answer any questions along the way through the chat system there as well. So today I'll provide an update there with everything with BGL in terms of Simple Fund and Simple Invest for the last month. And we've got a special guest, CEO and co-founder of Smarter SMSF, Aaron Dunn, joining us today. So welcome, Aaron.
Thanks, Stephen. It's great to be here.
So Aaron will be giving us an update on some of the things happening around SMSFs and obviously with the Smarter SMSF platform. And then Aaron and myself, as I mentioned, are happy to answer any questions that you do have along the way. Okay, so for this month, we'll be covering obviously the update we released on the 9th of March, and we've actually got another update going out just this afternoon as well. So I'm not going to cover any of the features in that, so that everything that we showed today is live and that you do have access to. So the first feature I want to cover off is our Smart Docs functionality. So we showed this first of all in our update session last month. So obviously our Smart Docs technology is the ability to extract data from documents and use that either for transaction matching, so in terms of coding transactions, or for automatically file those transactions. And there's things we can obviously do around bank statements in terms of extracting that data. So last month we obviously added the Smart Docs email address. So it doesn't matter how you get the documents into Simple Fund 360. So you can upload them using our UI and screen. So the screens such as the transaction screen, the document screen, the work papers screen. There's also our mobile app that you can use to get data in. There's ability for documents to be pushed in through our ecosystem, either for your firm connected via API or for the likes of Smarter SMSF pushing documents through. And we've also got our Smart Docs email address, which is found within Simple Fund 360 on the fund dashboard, which allows every single fund, company, trust, or individual portfolio to allow either yourself, the advisor, the trustee themselves to email documents through and for them to automatically be displayed and be used within Simple Fund 360. So it doesn't matter how you get the documents into the application, they're used in terms of our matching process. So we'll cover off that and just in some of the enhancements we've been doing. So now jumping across back to Simple Fund 360, a refresher for those that missed it last month is that every single SMSF trust or company entity will have a unique email address that you can use to send emails, documents to. Those documents, once received, will be pushed through into the document screen, as seen here. Our recent enhancements, what we've done is around our matching process. So we now allow matching in terms of coding transactions. So rather than actually having to create data rules or automatically match transactions, you now have the ability to use the data from those particular documents and extract data and use those for coding. So initially in our initial version, we launched this supporting contract notes and dividend statements. This now supports invoices, water bills, and some other types. And we're looking to expand that all through the year. And our aim is to have the ability to match every single document that an SMSF might require or could be processed through a bank transaction. So examples here is a dividend that we received here from CBA. You can see as I'll click on the transaction, the actual transaction itself is highlighted with the SD icon, so I know that there's a document there that I can use for to match that particular transaction. As I click on each individual field, so examples there are franked or the franking credit, you can see on the right-hand side that it's highlighting and matching the exact places there that it does link together. Okay, and so all the relevant data is going to come through. So I can actually use that and just simply click on match. So it's speeding up the process there of actually matching. That actual document is then attached also to the transaction, so it's there as a reference. And if we are using our work papers, the document will automatically file into the correct location there in the work papers. So there's no need to attach the document again to the work papers. Another example here is around our invoices. So again, this is a accounting invoice which has been paid. It's matching using the date and amount. As you can see there, there's not a lot of metadata there to extract here on the screen that's going into the transaction screen, but it will come through and obviously still be utilized there for matching. So I'm going to click on that. Okay, so going across there to the document screen. Okay, so here with the document screen, if I go and find that, let's say CBA dividend again, you're able to find again our indexing of documents using Smart Docs. Now you can see it's finding every single document there with the particulars. But as you can see, what it's captured there is all the metadata that we saw before is actually extracting out, as you can see there on the right-hand side. So in the future, what our aim is not only to use this for coding transactions, is to also attach the transactions to those that are already coded or matched, and then also use this for checking transactions as part of the review process. So that's our end goal with this, and obviously it will sort of expand over the next sort of 12 months as we go forward. Yeah, so our next change there was in the last verse there was a badges screen. So jumping back into Simple Fund 360, if we go down to the badges screen, for anyone unfamiliar with this screen, it's used where you can create multiple badges, and a badges is really a collection of settings that is mainly utilized on the report screen, but it's used in a few different others. So what we've done is taken a lot of feedback from users, and rather than just having a defined list, is actually try to group these by the commonly found ones. So you can find obviously them all grouped together in various ways. And in the top right hand corner, you can still jump back to a different view, which is a grid view as well, various tabs. So it really depends. You can tailor that depending on your resolution as well. So depending on what's occurring there on the within your practice or firm, the things like the badges can be utilized where it could be for different partners, different types of clients, different advisors, or you could just have one badge which applies to your entire client base. The flexibility is yours, and that's where it's been designed for. Okay, I won't cover through the demo these ones, but there's 5 corporate actions added to the corporate action screen and found there obviously within the list. Added even again another share spec for there in terms of the NASDAQ prices. New report added there is an investment unit price report. So this design, as you can see there on screen, the design behind this report is cover 2 questions: is which price is being used, and what is the date of the latest price. So obviously what we're trying to cater for there is which price is being used, especially for managed funds where you can have an ex-distribution price, an exit price, and potentially even a custom price added. So you'd like to quickly utilize which one's being used. And for things like property, what's the date of the latest price? So you can ensure all the investments up to date or potentially within the expected range by the auditor. So again, jumping back into Simple Fund 360, I'm going to go across there to the report screen. And we'll have there the unit price report. So I'll make that a little bit bigger. So with the price report, as you can see, probably the 2 main columns there to highlight are the price date column and the source column there. So you can see I've done this on purpose for this particular this fund. I've got an old ASX code which is no longer being utilized. You can see that the price hasn't been updated since 2015. You can see something like the property where it has been updated recently. And then obviously you've got things like the source column where you can actually see has it been actually provided by a feed there, or has it been manually entered? Is it using the ex-distribution price or a custom price? So you can see here for this managed fund, it's using exit price. We may want the ex-distribution price to be used instead. Okay, so for our work papers, you will have the ability there now to lock the work papers. So again, if we jump now back into Simple Fund 360 and go across to the work paper screen. Okay, so where all the statuses there are marked as completed, you do have the ability there to lock the work papers. And only those that have got access under user roles will have the ability there to unlock it. So it's where you can ensure where there's, say, particularly staff members, for example, that you don't want to edit it once it has been completed, can make sure that they can't touch it and edit any information. They'll still have the ability to do things such as export the documents out of the, export the documents or generate the actual combined PDF working paper file there as well. Superstream update. So we've sent a few emails out over one just before Christmas and one now in the last 3 weeks. So BGL's arrangement, as you can see on screen, is ending with Australia Post. So that'll cut over there at 30th of June 2023. So what it'll mean is any SMSFs that you do have utilizing the Australia Post ESA, you will need to move them across, obviously, to the Message Exchange ESA, so the BGL SF360 ESA. There are obviously notification letters for employers that can be generated out of a system, and the Super Choice form that can be provided there as well. So for those, obviously, there's multiple parties taking place in this, where you've got your actual clients, you've got their employers, and the employers obviously payroll departments. So obviously, because there's multiple parties in play, it's best to get on to this as soon as possible. We're actually updating a lot of the Superstream dashboards in our next update that will help with this process and highlight those funds that need to be updated. Okay, transfer balance cap indexation. So hopefully it's not news for too many people here. They're not seeing this for the first time. But obviously from 1st of July 23, the general transfer balance cap will be increased from 1.7 to 1.9. So this will obviously mean, I suppose, the calculation in how that $200,000 is apportioned for those that currently have a transfer balance account is similar for when the exact same calculation as when it increased from 1.6 to 1.7. So whatever the lowest proportion, or the lowest part that's ever existed within the transfer balance account has taken place, that'll then get applied to that particular proportion. So this will mean obviously a lot of confusion in terms of individual caps that will be anywhere from 1.6 to 1.9, and obviously a lot more there to, I guess, track within the system. Aaron, do you want to maybe add a few more comments and around that?
Yeah, so I think, Jeevan, there are a couple of really important things to remember here, because the transfer balance cap, whilst we think about it in the context of our income streams, so the fact that when we add an income stream, we have a credit to our transfer balance cap, and as you rightly said, we have proportional indexation that then applies, and we have to look at our incremental change on the personal transfer balance cap being linked to the smallest amount of available cap space that we had at any one point in time. So as you touched on just before, we may have seen an initial indexation from, say, 1.6 to 1.7, and we may have used half that cap, which meant our personal cap only indexed from, say, 1.6 to 1.65. But if we then added a further pension after that, say with some contributions, that proportional indexation will be a smaller amount than, say, that 50% we had initially. So I would say, Jeevan, there are going to be a lot of BGL clients relying upon your team to actually help them understand the information, because understanding the difference between that general transfer balance cap and the personal cap is now crucial to the planning of pensions. Now, that is one side of the ledger. The other side of the ledger, of course, is around contributions, because our total superannuation balance and the ability to be able to make contributions is linked to the general transfer balance cap. So that means that we have individuals that have a total superannuation balance over 1.9 million will then be ineligible to be able to make non-concessional contributions, where currently that sits at 1.7. So I think the most important thing that people need to be aware of here is that with the indexation of the cap, that is linked to CPI. So the CPI figure quite clearly has increased to the extent that it has allowed the cap not to move one band, but two bands from the 1.7 to the 1.9, whereas previously we'd seen that indexation just grow by the 100,000, which is how it's legislated. The other part to this was, of course, we were waiting upon the finalisation of the Awadi figure, so wages. Our concessional cap is linked to wages growth, and we needed it to be around 5.5%. Wages growth was a tick over 4%. So there is no change to the concessional contribution cap from 1 July 2023. And that then has a flow-on effect to the non-concessional cap, which is linked to 4 times the concessional cap. Why am I saying all this? I'm saying this because we need to think about that in the transitional way in which we can make non-concessionals. Currently, over 1.7, we cannot make any NCCs. Between 1.59 to 1.7 mil, we can do 1 times. Between 1.48 to 1.59, we can do 2 times. And under 1.48 million, we can trigger that 3-year bring forward rule. So those numbers aren't changing as such because the concessional or non-concessional cap isn't changing, but the thresholds do. So that 1.48 now becomes 1.68 million from the 1st of July 2023. And where it was 1.59, we also bumped that up $200,000 and takes us to 1.79 million. So there are a number of things in there you'll just need to be aware of. And again, you'll be able to filter for these based upon these thresholds within Simple Fund 360 to help you navigate those changes from the 1st of July.
Yep, and so some changes we've made to, I suppose, analyze what the impact will be in your client base there at the moment. As you can see there on screen, if you go across to the T-bar management screen, so obviously the screen used to manage this for all your funds there. We now have a CSV report that you can export, and that'll generate a file of all the current members that have a transfer balance account, and it'll actually show what the impact of the or the increase to 1.9, the $200,000 increase, will be across your client base. So that's something that you can generate now, even though it hasn't been, I suppose, legislated. I suppose it's highly extremely unlikely that it's going to be modified in any way. It's got to obviously be passed through houses and go through legislation. But the T-bar cap summary there will export to CSV. You can manipulate it however you like and go through and just open that on the screen.
Yeah, so Jeevan, I think that's right to remember that for all intent and purposes, the government would need to re-legislate to actually put a freeze on it, which I would find unlikely. We already know, and I'll talk about it a little bit later, some of the areas that they're targeting. But the ability here to start planning forward with your clients, I think is important because it's the contribution opportunity. And of course, since 1 July 2022 last year, that contribution eligibility has actually increased through to age 75. So you should be using this data to not only be looking at cap balances, but then also taking advantage of the extension of age, which you can again filter through this CSV export file.
Spot on. So that CSV report, as I mentioned, you can see that the last column there highlighted will show what the actual personal cap will be for each of the individuals there at 1st of July 23. So then that obviously file you can manipulate however you like there in Excel. I did see a question pop through that how do you account for APRA balances within the SMSF there as well. So if you go to the individual funds transfer balance cap, you do have the ability to enter in external total super balance, I suppose, amounts into there, as well as also add in adjustments if needed as well. So you do have the ability to cater for APRA funds in terms of external balances to make sure that calculation is accurate, because obviously it includes balances from all sources. The other thing we'll be doing, which is done now, around the total super balance, which Aaron will be talking about a little bit later with the $3 million proposed tax, is we do have the ability there for you to filter Let's go down here for total super balance again across your whole client base. So, for example, you could find members there between 2.7 and 3 million, and find the funds that will apply there with your client base. And if you click up top here, you can tailor that those filters based on what you want. So it might be something that you want 2.5 to 4 million or 2.5 and higher. And you can go there and tailor that accordingly to find which members will obviously apply and impacted by the proposed changes. Okay, jumping back, something I'm not going to demonstrate there, but it's an integration we've just released is Sila. So they're a crypto tax calculator or software that connects through to various exchanges and has the ability to load CSV files. So they'll create a crypto tax position and have the ability to push that directly into Simple Fund 360 or Simple Invest 360. A few coming soon. I saw a few of these questions popping up. In tonight's update, we will have the ability to read rental statements available. So that'll read everything on the statement in terms of the income and expenses and impose adjustments at the actual date of the actual period. So that could be monthly or annually. And then next on the list, we'll be looking at things such as insurance statements, RBS statements. And we are looking hopefully by sort of the August period and the start of the new tax statements coming out is the ability to also read an annual tax statement and post all the contribution components and all tax component details directly in. What you can see there on screen is a preview there of what the actual rental statement process will look like. So you can see there on the left-hand side, it's loading through the actual statement. And there on the right-hand side, it's actually posting all the adjustments based on the data there that's within the statement. So that'll be released tonight. Also in tonight's update, we'll have a new report, so a monthly rental statement report. So it's similar to the existing rental report, but it'll break everything down on a month-by-month basis. So for those funds that you are entering in the information there on a month-by-month basis, you can make sure it reconciles as you do go along. For those that are using both Simple Fund 360 and Simple Invest 360, so what you can now be able to do from tonight's update is the ability for consolidated reporting. So that's the ability to combine, for example, companies, trusts, SMSFs for a family group or related parties, and actually produce reports and dashboards based on that combined entity. So that again will be released in tonight's update. What we're currently testing with some pilot clients is with our practice management integration is the ability to sync with APS practice management suite and as well as MYOB GreatSoft. So if your firm utilizes either of those two products and is interested in this, please get in touch with our integrations team or support team and we can let you know once that is available. The other thing is for those that utilize our registry data is we've just signed an agreement with Advanced Share Registry and we're hoping to have that available from the, the third quarter of this year. So from really 1st of July onwards, but again, we'll keep you updated with any changes with that. And now we'll move across to Aaron, who's going to give us some SMSF and Smarter SMSF updates.
Excellent. Well, thanks, Jeevan. I think one of the important things in the relationship that we've had with BGL for a long period of time is the amount of work that we do together, both in a training sense and then naturally with the document platform. And I think maybe, Jeevan, if I can get you even just to jump across to BGL, to Simple Fund 360 for a second, just to show people as well where they can connect. You know, we've got plenty of people that actually do this, but directly from within the Simple Fund 360 software, you have a direct connection to be able to tap into the Smarter SMSF platform and be able to access documents. That's not what we wanted, but anyway, that's fine.
No.
But that's
my test account.
That's your test account. Okay, well, that's good. Yeah. But what we have is the ability to connect your Simple Fund 360 software to be able to order documents there as well. And the other thing naturally that we have done is we've built a lot of our training into the existing BGL knowledge base or the learning centre. So things like our foundations course to enable staff to be able to keep up to date with content is another, I guess, part of the partnership that we've been involved in with BGL for sort of 20 plus years. So Jeevan asked me to come on and just give a bit of an update, I guess, what's happening within the landscape more generally. We are in the middle of our SMSF Day events around Australia. And Jeevan sort of said, oh, what's making news? What's happening? What are you talking about? And so forth. And one of the things that we've done in the past 6 or 7 weeks is we've appointed a new technical and education manager, Tim Miller, who's very well known in the SMSF industry for his expertise. And both Tim and I, having already conducted our Melbourne, Perth and Adelaide events, quite clearly the big issues have been around these things that the government have introduced at the start of this year. Now, we are going through a period of consultation, but first and foremost, we have this legislating the objective of super. Now, Jeevan, if I can just get you to go to the next slide for me, because this is really important from a foundation perspective to understand what the government is trying to do here. And this goes back to 2014 when the government first tried to introduce this objective of super off the back of the financial systems inquiry. Now, that didn't eventuate, and it didn't eventuate for a number of reasons. There was concerns about its aspirational tone and so forth, but it's come back off the back of the retirement income review. And quite clearly, as we work through the different terminology here, and we've really drilled down on this in our SMSF Day events, what the terms mean and therefore how it is going to shape superannuation policy going forward. And we've already seen the government pull the trigger on one of these key areas. So all I wanted to touch on today was to make you aware of what this legislating the objective means and what you should be looking out for as we move towards a budget. Because the reality is we will see further changes over and above the proposed tax on high super balances, which I'll touch on shortly. So the objective here is to preserve savings, to deliver income for a dignified retirement, along with government support, so supplemented by age pension, other Commonwealth rent assistance and the like, in an equitable and sustainable way. So there are some key messages in here that you should be aware of. One is about preservation of savings. So the government's view is that it should only be used for retirement purposes. So that is twofold. One, for preservation purposes, we're not going to see it being used in the way it has in the past through COVID, where we saw the early release under compassionate grounds, and also for housing. So we may see adjustments in that regard. And the other one was also around certain elective surgeries that we've seen as well. So we will see a sharpening and tidying up of the preservation rules in that sense, but also they're making it clear that it is retirement income, not for estate planning purposes as well. Now, that delivering income is that it's there for the delivery of income in retirement. So again, the focus is that it's not in the guise that it's been used in many instances today, insofar that it can be used as a tax shelter in many respects. We haven't had to draw pensions off this money since 2007. So from that point of view, whether we see any shift in views by the government in that respect, but what they are making clear is that it's an income issue. And this is why APRA funds have been spending a lot of time now looking at their retirement income covenant and saying, how do we change the conversation with APRA funds to deal with retirement incomes? SMSF's quite mature in this sense. We have more than 40% of clients drawing pensions from their superannuation and self-managed funds at this point in time. And the final one is that equitable and sustainable definition that you can see there as well. So it is about providing similar outcomes to people in similar circumstances, but targeting the concessions in the right way. Why do we want to be giving significant benefits to people with very large balances that are getting more of a benefit from the government than someone that may be on a full age pension? And the other thing is that they are trying to re-weight how these concessions might look because they have other challenges in their budget that they need to be addressing. The NDIS is a perfect example of that. So we were, therefore, once we saw this, we were quite surprised, literally, the next business day after the SMSF National Conference recently, where the Minister for Financial Services spoke, we saw the Premier, the Prime Minister, I should say, and the Federal Treasurer come out and announce this proposed measure. And this measure is now introducing what I'm calling a member-based tax, not a fund tax. Yes, there is, in essence, the individual is going to pay 30% potentially where they have a balance above $3 million, but it is a member-directed tax. Okay, and why is it a member-directed tax? It's a member-directed tax because it is linked to that individual's total superannuation balance. Now, as you can see on the bottom of this slide, the one thing to note in terms of how it intends to operate is that it's like a Div 293 notice. So the information that gets sent to the ATO is then going to determine the calculation that will then be issued to the member. And that's why I make the comment that it is a member-based tax. And that individual will be able to choose to pay that tax personally or have it released from their superannuation fund. So a lot of questions that we've had asked already is, well, does it mean that we still get our earnings tax exemption in the fund? So our ECPI claim, how does it work? Do we get any CGT reset like we did in 2017? This is why I come back to distinguishing between a member tax and a fund tax, because the fund is still going to be able to, through the tax return, claim its exempt current pension income and have an actuarial certificate that will determine those amounts. But it's not going to get any other CGT relief because it will have to pay capital gains or potentially have a capital loss, whatever the case may be, off the back of the tax result from when it acquired it to when it disposed of the asset. This is looking purely from a total superannuation balance point of view and will apply year by year by year in respect to that member's balance. So as you can see on the right-hand side here in the calculation, there are 3 steps to this process. The first thing is we need to determine earnings, and the earnings is simply the shift in the individual's total superannuation balance from one year to the next. So it's our current year, which would be 30 June 2026, less the previous balance at the immediate preceding financial year. And then we need to make add backs of withdrawals that have been taken, lump sums and pensions, and then adjust off the net of tax contributions. So concessional contributions have its tax adjusted. So once we've got our earnings calculation, and quite clearly you can see in there, it's starting to capture things like unrealized gains. There are other issues that get impacted in TSB, which I'll touch on shortly. From there, though, we need to work out, well, how much of this relates to the member's balance that is above 3 mil. And it gives us a proportion, and then we apply the 15% additional tax rate to those earnings multiplied by the portion over it. So in very simple terms, and there are a number of, I guess, articles you've probably read in the fact sheet on the Treasury's website. But if you have an example where the member's balance has gone up by, say, 500,000 and 50% of that was then attributable to pension earnings over 3 mil, so that closing balance was, say, $6 million, well, then we have 15% times the $500,000 multiplied by the 50% proportion, and that will give us our tax liability. Okay, so it is capturing a whole range of things that are potentially of concern, and these things are now all being re-raised and sent back to Treasury to try and get some interpretation on. Treasury will be releasing a consultation paper on this. There are working committees being put together within the industry to try and address these things, such as, you know, credits for reversionary pensions, how we deal with insurance proceeds, LRBAs that have commenced after the 1st of July 2018. There are a broad range of things that we don't have information on at the moment that we need to get clarity on, so that when and if we move into this legislation, we will have clear line of sight as to how these rules are ultimately going to work. So yeah, this is obviously pretty big news and formed a fairly substantial part of the conversations, Jeevan, that we had at our SMSF Day events. So if I can just get you to flip back to the previous slide for me as well. The other thing, when we add on top of all that, is the other issue of NALI and NALI as in the expenses. So if we have NALI, we are incurring potentially the NALI provisions, i.e. the 45% tax rate. So we, again, have had this issue going on since 2018. And finally, we've now had the government come out and acknowledge these issues. And this was sort of 12 or so months ago, but we had a consultation paper putting in place a proposed approach to how they would look to deal with this. Now, from an SMSF point of view, we're seeing a 5 times factor-based approach to the non-arm's length expense that would be incurred. Importantly, this is the general expense where it is connected to all of the fund's income. So the best example I can give you is accounting fees, where the accounting fee that you might not have charged to your self-managed super fund because you're an accountant in an accounting firm, that amount where you are charging it in your individual capacity, so you're wearing your individual capacity hat, not your trustee hat, will mean that the difference between what you should have charged your fund and what you didn't charge your fund will be multiplied by a factor of 5 times, and then the 45% tax rate applied to it. Now, there's a couple of asterisks around all that because maybe the current rules provide a better result than the proposed rule. But again, these are things that we're continuing to follow and work on. This was quite a surprise because the consultation that has been happening for a long time, you know, we are 5 years since these measures were introduced in July 2013. This wasn't spoken about in any way, shape or form. So the feedback back to government is that a lot of the issues that have now been sort of talked about could easily be rectified by actually removing these measures, because this all came about originally from the zero interest loans with LRBA some time ago. So there, I would suspect in this instance, like with the $3 million, we'll see a bit more water go under the bridge to actually try and get some final resolution on this. So yeah, they've been some of the really big things, and you can see on the bottom, I've got a couple of little diagrams here. Yeah, we've taken a case study approach to this event, looking at contributions and pensions and death of a member, and then even puncturing that life cycle to go through, you know, divorce, disputes, departure, and that sort of thing. So it's been great to get out and about. And I think most importantly for you, we've got a couple of events still left, and then we have our online course, and I'll share some info with you shortly around that. So Jeevan, if I can get you to flip forward, I guess, from a further update from our point of view with the stuff that we've been working on with BGL. Jeevan, I've got your team working a little bit on some additional API endpoints. So we have a number of BGL people using our pension documents. One of the things that we needed to get resolved was the importing of the components of the superannuation interest. We now have the ability to do all that. Recently, BGL, the API team were able to give us some additional endpoints, and we expect to have all that finalized early this month. So we're kind of, from a process point of view, we get it resolved in our own platform, and then we, in essence, get all that migrated across into the BGL document platform that we have. The other fantastic news is that we are just launching our ABN TFN integration. So you can, as you can see on the bottom of the screen, once you've ordered a brand new fund, you will then be able to take that next step to be able to order the ABN TFN, which we now have that integration complete with the Australian Business Register. Now, this is the first part. We will then also be enabling GST and PAYG registrations to follow after that. We're also, as part of this kind of fund establishment set, we are combining our new SMSF and company form. So the idea is you'll be able to do that in one single step, and then the ABN will follow thereafter. So look to see that come out in the not too distant future. And we are then, to complete that loop, is we're about to commence some work around a Macquarie cash management account integration. So again, taking it to the point where you've not only set up your fund, you've got your ABN and TFN, but you'll then be able to initiate that process for the Macquarie CMA. And we hope to have that done by June. And Jeevan will be going, of course, on the BGL RegTech tour, and we'll be able to show people some of the fantastic work that we've done in that space as well. Doesn't finish there. As I said, the pensions thing, not only are we, I guess, doing a deeper integration, but the other common one that we get, and we had a real life example with this with our pension documents, and we might do a separate session on this to explain a little bit more. But what we've now introduced is a two-step process if you want to with our pension documents. So what I mean by that is if you want to start it at 1 July and you don't know the balance, you'll be able to commence the pension with an unknown balance that will then be confirmed once you have prepared the financial statements at a later point in time. So currently, you can start an account-based pension, a TRIS, a death benefit income stream, all through a single-step process. Once you know the balance, you're confirming that oral request. You can still do that, but you will also be able to start it with an unknown balance. It will then create a saved order. You'll then be able to drag down that additional information out of Simple Funds 360 to populate that once you know that, and then you'll be able to complete that second step as part of that process, and then naturally get all your T-bar lodged thereafter. The team's been working on a property ownership declaration, a market valuation minute. We know that auditors are requesting more and more in that space. And the other one that we seem to be getting a hell of a lot of at the moment is just changes to trustees and directors. So we've added a fairly expansive suite, not only to add and remove ordinarily, but we're seeing a lot in respect to incapacity. So we've now built into here, both in a change of trustee with individuals, but also with director changes. And again, we'll look at updating either Simple Funds 360 or even passing stuff through to CAS 360, EPA appointments due to incapacity, due to traveling overseas for residency purposes, and of course the same in respect to the death of a member as well. And the final one is just dealing with rollovers in and out of funds to ensure that you've kind of just ticked off all of those requirements within Reg 6.33 and Reg 6.34, which again, this is the first year that auditors are going through this process, and they have obligations that they need to ensure that the fund has complied with where we're rolling money into or from a fund. And again, we've built some additional paperwork around that as well. What else can I tell you, Jeevan, here? So we do, as I said, we have got 2 events left. They are next week in Brisbane and Sydney. So if you are in any of those 2 locations, we are literally closing the door on both of those, but you can take advantage of it. BGL has been traveling around the country with us as an event partner, as they have since the very inception of these, I think in 2016. So you can take 15% off the ticket price. You can see at the bottom there, SD23 BGL when you buy it. Or if you want to access our online course, that will be open from the 17th of April, 2023. And that 15% discount also applies there as well. So hopefully that's given you a little bit of insight into what we have been working on at Smarter SMSF, and most importantly, what is currently shaping the self-managed super fund landscape as well. It's been a lot of fun, Jeevan, getting back on the road again. I think most importantly, you've been doing it with the masterclasses as well. I think there's no real substitute to getting out and talking to clients and trying to understand, you know, what's happening in their practice and how we can build solutions to support them.
Definitely. Nothing better than face-to-face. So we definitely missed it during, especially both of us being Melbourne-based in weekends.
Yes, correct.
So yeah, Aaron and I will, I suppose, now go into, I guess, Q&A and stuff. So maybe Aaron, while you're in the mix of it, maybe the first question there from Kelly.
Yep.
You know, obviously based on what we know so far, interested in your thoughts about how the proposed tax may affect current exempt current pension income deductions. Yep. And also cash flow requirements.
Yeah, so again, it's not going to impact ECPI. So again, that's why I kind of really reference this as a member tax, not a fund tax. So the fund will still be eligible for its eCPI claim, and you'll get in either a segregated or unsegregated basis, okay? And our disregarded small fund asset rules are all still going to apply as well. What it will do, however, is it will have a significant impact on the cash flow, in particular if the individual wants to be able to release that money from superannuation. So it's not uncommon to see commercial property or highly illiquid assets with heavy asset concentration in the fund. So if we have a fund, and there is an example of Carlos in the fact sheet, where it's a $9 million fund, he has pensions that he's got to withdraw. But if we've only got a level of commercial rent that's coming in that maybe covers the pension, there might be a little bit of fat on that, but not much else. Well, how is he going to be able to fund this from a fairly heavy asset-centric asset? And this is where a lot of the feedback has already been around farmers and farmland. Farmland on certain sort of zonings for residential might be worth a hell of a lot of money now, but it's not generating the income. But this is someone that's now going to be taxed on this benefit, and they might not actually have the cash flow as well. So investment strategy considerations with this will become really important. And we can see, even where you've got a fund that might have $2 million in one member, $2 million in the other member, they're not deemed to be rich for the sake of this example. Member A dies, pension reverts to member B. They've now got 4 million. They're now deemed to be rich. So how does that credit over to the reversionary impact on that individual? And what I didn't say earlier, which I should reference here, is that if you have a year of negative earnings, that negative earnings will then carry forward to subsequent years. Now, that's fine if they can use it. But what happens if the member dies and that's lost forever? If this goes through in its current form, we would like to see that credit get applied across, just like a pension would for reversionary purposes, so that that individual in the year of the transfer might not be as impacted as much as, say, potentially the formula currently works. So great question, Kelly. There are a number of things there that we need to understand, but cash flow is certainly going to be something top of mind for many people.
And probably while on the topic, there's a question there from Deb. Who decided that $3 million was sufficient? Are defined benefits going to be included? And I guess those thoughts on the cost to administer the systems, as you know.
Yeah. So, so Jeevan, you and your team will have a fair bit of work to do with this, obviously. So here's the way it works, right? So I don't know if many of you will recall, and this goes back to probably the budget last year and even budget 2.0 in October last year. It gets, whenever the government is trying something on, it will start to filter out into the Fin, the Australian newspapers, and so on and so forth. That is all done to gauge interest and to gauge the temperature of policy settings. The problem with this is it always started to flag these issues: hard cap, threshold, work out, is this going to work? Isn't this going to work? We spoke about 5 mil. We then got down to 3 mil. So my issue here, and why this has come out early, is they lit a match that created a bushfire. And ultimately, they needed to pull the trigger on this early. And as you would know full well, when it comes to budget night, they want to sell good news. They don't want to sell bad news. So from this point of view, the earlier they can get it out, they can put out the bushfire that was starting to, I guess, generate as a result of the rumors about the change, so that they can look at cost of living measures and all the other things that are nice and fuzzy and warm against the backdrop of the budget in May. So the idea is, yes, it is intended to apply to defined benefits. There are 5 parliamentarians on the Labor side anyway that have defined benefits that will capture these, including the Prime Minister. They had no idea how that calculation is going to work. So they're going to have to consult through this and work out how on God's earth this is all going to occur. And this is part of the problem in the reactionary nature of some of these things. Now, the fact that we've got several years to work through it, maybe we get to a solution that does work. There have been proposed alternatives. Do we apply it like the excess concessional contribution, interest rate charge and stuff? There's no right or wrong. The things that are unfair are things like taxing unrealized gains. There is no other policy setting in Australia. There's only one other policy setting in the world, in Denmark, which is a new sort of thing, which is trying to do a similar guys on incremental gains in respect to certain assets. So it is fairly unique in that regard, and therefore it is being heavily tested against to try and find out, how we actually target that in the future and get that setting right.
I'll let Aaron catch his breath there, but
Yep.
The next couple of questions there, a couple of people missed the start and said, is today's session being recorded? All the sessions will be recorded, and you should find them available there on our YouTube channel. All attendees will be also sent out an email by our marketing team. We'll probably include today's slides as well as a link to the recording. So don't, if you did miss part of today, I suppose don't stress as well. There was also some questions around emailing the documents through to BGL. So with the actual documents and smart docs, if you're using the email, you can send those as individual emails, or you can send all the documents in one email. So there's multiple attachments. It's the same in uploading, exactly the same thing. If you wanted to utilize our smart docs process in terms of extracting the data from the documents, you must send those as individual files. We can't have one combined PDF and extract those at the moment. So it is something in our longer term roadmap, but not available right now. Question there, Aaron, for you from Margaret: is Smarter SMSF an additional subscription?
So yes, it is. But what we have, as you could see through there, is an integration that allows you to access this way. So what we've done with BGL is not only can you order documents on a pay-as-you-go basis, which there is pricing that enables you to do it on a competitive basis, but it allows you to then access through a subscription package as well. So subscription packages start at $180 a month or $1,800. It is done in a pack that enables you to suit the size of your business. So 25 documents over a 12-month period, you're paying on average $72 a document, as opposed to, say, a self-managed super fund establishment pack that is $132. And ordinarily on our site, it's $200. So there is, I guess, a preferred partner pricing that we have from a PowerYG point of view, but subject to the number of documents that you have, the moving into a subscription package, and that is a flat pack price. So if you look at it in the context of different documents that you might use with LRBAs or new funds or pensions, or even just some compliance ones about rollovers, it is a static price that you pay. And then you get some other features and stuff around it as well. Like I said, we're still sort of loading out things like our ABN and TFN and further embedding some of the integration work that we're doing with BGL. So we have a specific page on our site, smartersmsf.com/BGL, and you can find out more there. And we've got a number of demo videos and stuff that will run. And equally, we've got our own YouTube channel that you can kind of get some of that info there too.
Question back to Smart Docs. So can we change the name of the documents once they're added into Simple Fund 360? Not at the moment, but this will be available in the next couple of months. So you will have the ability there to rename. Aaron, question there from Karina. Are the unlicensed accountants letters going to be available through BGL as well?
Yes, we are intending. So we're doing a bit of a refresh of that entire thing. So by the 30 June, we're actually going to be bundling them into our existing subscriptions and sort of bringing that as part of a workflow process. So we've built a number of documents to deal with execution only of particular documents. So if you need to be able to utilize those, you'll be able to use those documents where appropriate, and then build the additional document that might follow thereafter around pensions and fund establishment and the like as well. So yeah, so I guess watch this space at the moment, because there's a fair bit of work that we're doing in that. We were waiting until the quality of advice review had been finalized. Now that we know where that's landed, we will now sort of proceed forward with a bit of an update around that product structure.
And maybe on the documents, question there from Karine: will ABN TFN integration be also available for companies and trusts?
We don't have companies and trusts, I guess, generally on our platform. So at this point in time, the short answer will be no. We've predominantly focused, we're an SMSF-based business. So at this stage, it will be predominantly focused there. Never say never, but I guess in the immediate term, it will be strictly linked to simple fund registrations. And the data and the feedback we've seen already is showing that it, the process that we're getting end to end is going to be saving sort of north of 30 minutes.
Maybe we go 2 more questions, Aaron, then we'll wrap up.
Yep.
So last one there from Peter. Can you reiterate gnarly on trustee accountants not charging for accounting fees to their own fund?
Yeah, so if you have a scenario where you're doing your work for free relating to your self-managed fund, but you're using your team and you're using your SMSF, your Simple Fund 360 software subscription of your firm to do that work, then you are not using your trustee hat, you are using your individual capacity hat in which to undertake that work. So ordinarily, you should be charging a fee to your fund that you would be charging to the public at large, unless there are some other policies you might have internally around staff discounts that equally apply to everyone in your organisation. And the Law Companion Ruling 2021/2 gives some additional info there. So what is being proposed, and again, caveat, it is being proposed, is if you charged ordinarily to your fund, it would have been $5,000 and you did that work for free. It is being proposed that we need to apply a factor of 5 to that amount of $5,000 equals 25K, and then a 45% tax rate will apply to that arrangement because you are not dealing with your fund on an arm's length basis. Okay, so, and then the rest of the income for the year, if you had $100,000 worth of income, then the other $75,000 of income for the year would be subject to tax at the concessional tax rate. Okay, so there's a number of things that are in the consultation. And again, we sort of talk through. If you do want to find out more, I would suggest, if you can or can't get the Brisbane subject to where you are, or Sydney, the online course, one of the modules that we have in there goes through all of these details. The $3 million proposal, the gnarly consultation, an update around the electronic signing rules, and a range of things. That latest intel on SMSF is just one topic. And what we will probably hope to do, I need to speak to Anthony Jeevan, but maybe we can get this into the BGL Learning Channel as well.
Be great. Last question before I wrap up is commencing pensions where you don't know the exact balance. What does Smart SMSF do about this? So I guess from a BGL perspective, if you're using our sort of basic documentation, it's assuming you know what the balance is. So we don't really cater for that. But Aaron, maybe explain what you've Smart.
Yeah, so Jeevan, if I can get you to go back a couple of slides to that. So this is really the example that we've now done. Yep, back forward one there. One more, go forward, if you wouldn't mind. Yep. No, sorry, where was it? There was one with a diagram on the right-hand side. Keep going down. Next one. There, that one. Okay, yes. So we had a real life example late last year that triggered this. Well, yeah, mid-ish last year that triggered this for us. So the way in which we build our pension documents is that you don't need to backdate them to the 1st of July, because there was an oral request in which, once the accounts have been done, you're confirming what that balance is. So you could be doing the accounts now and you're dating those documents now, confirming the oral request that occurred previously. We had a real life issue whereby that oral request had occurred, but that client then lost capacity and then subsequently died. Now, the financial statements of the fund hadn't yet been completed. Now, we were able to work around that issue, and the EPA was able to sign those documents, and we're bringing in EPA options into our documentation at the moment. But a really easy fix to this is to give you the choice whether you want that initial request to be done orally or whether you want that initial request to be done in a written form. And this is where this 2-step process was born, because you can say, I hereby request to commence the pension. At this stage, in essence, the balance is unknown, but there are a range of things that we need to do. And then we, at a second step, confirm that information from that initial request once the accounts have been done. And again, this all links back to the Smarter SMSF deed. We do have what I'd call a generic set that would enable you to still work through these issues. We have some key features within our pension documents that relate to our deed that are kind of over and above what is in a generic set and what we have compared to some of our competitors in the market. For example, whether you want it to rank higher or lower than DBNs, whether you want it to become a special rule of the fund. So it annexes itself to the deed to allow you to change the pension midstream without it maybe impacting Centrelink. If you want to remove a reversionary, you want to change reversionary percentages and the like. So we are literally just launching this on our own site at the moment. And in April, the next month, we will have this available within Simple Fund 360. So as you move to 1 July, if you do want to set pensions up with the unknown balance, you'll be able to do that from within Simple Fund 360 to be able to generate it via our integration with them. And it will create the saved order that you can then go back to then complete that. And again, you'll be able to drag down the known data that will then commence that as part of step 2.
Perfect. So we'll wrap it up there, Aaron. So Aaron, thank you for joining us for today.
Pleasure.
And hopefully, happy to join again for other webinars that we do.
Yeah, no, more than happy to do so.
That'd be great. And no, for everyone attending, thank you for watching. And if you do have any questions for Aaron, what's the best way to contact you?
You can get in contact with us at team@smartersmsf.com. So if there are any questions today that you'd like some further clarification on, you can send us an email there, or even jump on our site, and we've got a ticketed support there. You can sort of lodge a general inquiry through there or give us a call, whatever. We'd be happy, obviously, to help, including any demos and stuff that you'd like to find out more about the work that we do with BGL.
That's great. Okay, we'll bring it to the end. So thank you, everyone.
So
Have a great day.
Cheers. Bye-bye.